Hey guys, it's Cameron at Otis Properties. Hope everyone's keeping well. The reason for today's video is just to talk about the current market as we see it right now. Now, I did a video similar to this a couple of months ago, and I specifically want to reference the rental market and how that's faring with all the interest rate cuts in a time of COVID and those sorts of things. So rentals. How do we come up with rentals? How do we come up with the rental pricing? What are people going to pay per month, etc. So typically, as a rule of thumb, we will look at the value of a home and apply a percentage to that. So for instance, if one were to sell a home and the expected price was around about R1 million, we would probably have looked at a potential rental of about 0.7% of that value. So effectively, that would mean on R1 million home, you're looking at a R7,000 a month rental. Now, that obviously does change depending on demand. So if there's a higher demand, that figure might go to 7.5 or maybe 8,000 rands a month. So that's typically what we've been using as a rule of thumb for a number of years, as I've said. What we've seen, though, over the course of this year, with the lowering of the interest rates as we've seen them, and I say currently it's 300 basis points this year, which is remarkable, is that a lot of would-be tenants are now moving away from their tenancies or their rentals and are now becoming first-time home buyers. To illustrate that, if you were looking to purchase a property right now of that same R1 million, you're probably looking at a bond repayment figure of around 7,753 rands, again, dependent on the interest rate that the bank would rather bond to you. Now, that compares extremely favorably with a rental figure that you might have paid a year ago. Unfortunately, though, for the rental market, what we're seeing is that these rental figures are not being achieved. And because so many would-be tenants are now jumping onto the home purchasing market, we're seeing that a large number of rental properties are going untenanted for months at a time. And the only advice that we really are able to give those landlords is either to reduce their rentals or maybe even put their properties up for sale. Now, the scenario has become so poor that in some cases there's so much stock available that landlords, even though they've reduced their rentals, haven't been in a position rather to be even able to rent those. So that makes for very difficult reading. And this was actually borne out by the recent PayPop report that came out for the last quarter. And they painted a pretty grim picture for the rental market in total. So I think the advice given here is, the cycles do change. One would expect that over a period of time, the rental market will normalize. Obviously, from a purchasing point of view, now is a fantastic time for people to get involved in the property market because interest rates are very low. And again, many commentators don't believe that we're going to see any serious interest rate increases over the next 12 months. So really, really a perfect time to get into the property purchasing mode. Guys, if you are thinking of buying or selling, leasing or renting your property, or you're looking for a home loan, oh yes, your number one choice, as rated by Hello Peter. Thanks so much. Bye-bye.